Aloha, this is Joshua Hayes at BigWaveTrading.com coming to you with October 27th's market wrap up for you to use for October 28th and in the future. First of all, I just want to say thank you very much. Sandy, Frank, Joey, everybody once again has been proven wrong. They told me after the follow through day to buy stocks, that stocks were going higher, that we have bottomed. Since the follow through day on the S&P 500, we are down 10%. Since the follow through day on the Nasdaq, we are down 12%. Since the follow through day on the S&P 600, we are down 16%. And since the follow through day on the New York Stock Exchange, we are down 13%. So I want to say once again, everybody, just like in March, whenever people told me you got to buy bank stocks, including like Lehman Brothers and Bear Stearns, and another one was Merrill Lynch that I was told to buy. Well, Merrill Lynch still exists, so let's pretend like I would have listened to this person in March. Well, I would only have a 67% loss in Merrill Lynch right now, so I guess it isn't that horrible. But the bottom line is that person was wrong in March, and the people that told me that the stock market had definitely bottomed are wrong again. Even if you did, let's say, buy the bottom on the date of, I don't even know what date that is. Let's say you bought the exact lows of 10/15. You are now down 7% on the Nasdaq, and same thing with the S&P 600. Let's say that you bought the lows on 10/15. You are now down 11% on the S&P 600. So since all of these guys told me that the market had bottomed and that stocks were going up and that they were either long and strong, baby, or feeling really sorry for me that I was still short stocks, they have now proven themselves to be the biggest, loudest, and most ignorant idiots that I have to deal with. And what's funny is that these guys always show up whenever, look at the S&P 600 down 16% since the 16th of October. What is the funniest part is that I constantly tell you guys that the best time to be long stocks or indexes is when price is above the 50 and 200-day moving average. Let's just go back to 2003 and just take a look at the S&P 600 by doing that. If you would have done that in 2003, and you would have held it for as long as it went up. Let me go to that. So let's say on a Zoom 1, 2003, right here, you bought it in April of 2003 as it took over the 50 and 200-day moving average and stayed above it all the way until then in June. You got a 44% gain alone in that index. And look at some longs now that I can build it up. Look at Epic then. Look at USNA. Look at NetEase. Look at Cena. Look at Sohu. Look at 8. Look at Taser. Look at Evol. Look at Hill. Do you notice the tons of Max Green Bop, the uptrend above the 50 200-day moving average? And what was the market doing then? Look at the stock market, the index. Look, it gets above the 50 and 200-day moving average and stays above that after the March 17th follow-through day. Look at the follow-through day. The follow-through day was on 3/17/03. The follow-through day came on volume much higher than any of the volume during the downtrend that came before it, and came on volume and took out the 50 and 200-day moving average. So this is what it looked like in 2003, and this is what it looked like in 2002. We took out the 50-day moving average, and then we took out the 50 and 200-day moving average. Now look now. So all you people that are calling bottoms, we haven't taken out the 50-day moving average and we haven't taken out the 200-day moving average. And do you remember all of those Max Green charts that I just showed you with all the strong accumulation, with all the beautiful price trends that are moving up? Look at the stuff that's out there now. This is what most of the stuff looks like out there right now. Most of the stuff is not moving up. It's moving lower. Like, let's look at the SOX index. And this is what most stocks look like right now. So it is not time to be long stocks. You should not be long the market. The right play is still to be short. And some of you people are like, oh, I feel sorry for you because you're still short Apple. Well, first of all, I'm still short Apple from the September breakdown, so I still have a 41% gain, not a loss, instead of whatever. Let's say you bought the lows here and you sold at the top. Way to go. You got 17% gain. Your 17% gain is still lower than my 41% gain. And for all of you people that think the stock market has bottomed, I think that by now, when you see all of this distribution, all of these big red, tall red bars, and you don't see any big green volume bars coming from the bottom like you did in 2003, and considering that most stocks, like let's look at IBM, considering that that's what charts look like now, and let's go back to 2003 really quick and go back to some of the better ones. Let's look at Taser. Look at Taser. Look at Epic. Look at Evol. Look at Moby. It doesn't exist anymore. Wow. Look at Sigum. Look at Hill. I mean, look at this. These don't exist right now. You don't have charts that are this pretty at all. There's only one stock that I'm long right now that has any Max Green Bop or Green Bop in it, and I'm definitely not going to show it right now. But anyway, I'm going to go ahead and wrap it up there because there isn't a whole lot more else to talk about this market. Let me go ahead and show the indexes one more time, and let me remind you, this is the NASDAQ that I'm throwing up. As long as that these price bars are below this white line, which is the 50-day moving average, and these price bars are below this line, which is the 200-day moving average, you should not be long stocks. The best time to be long stocks is when it's above the averages. And I'm going to show you one more time. Look at 2003. Ever since the follow-through day to the top in 2004, a 50% move on the NASDAQ came with certain stocks like Netis that I was long here. I bought it here. Right here's the first buy. And now let's look at the first sell. And let's look at the sell in October. So from my buy on 7/30 to my sell in 10/10, I have a 3,800% gain. Not only that, but I had Taser. So let's say that from this, let's just say that I sold some up here in 2004 because I held it for 12 months. Just by holding it from 721's breakout to January 13, 2004, I have a 719% return. And let's look at some of my other beautiful ones during that time. Hill, from the buy here to the top here, there's a 300% return. And then look at this. Look at 8. Look at these Max Green Bop charts. Look at this move in 1 month. In 1 month, from 1029 to 1128, the stock moved 334%. Now let's look at other stocks. Let's look at Epic because I bought a ton of Epic. Epic was bought mostly here, and if you held it to here, there's a 392% gain. So look at all of this green and Max Green Bop. Look at all this big, heavy accumulation. Look at the price pattern. Look at Epic. Look at Evol. Look at Cena. Look at Sohu. Look at Netis. Look at Hill. These are what charts are supposed to look like. You're supposed to have charts that look like this. And this is what makes you happy. This is what makes me happy. Look at Sigum. Sigum, from just right here, this buy right here to just this sell right here, that's a 69% move from April 11th to June 3rd. 70%. And then look at Hill. That's beautiful. So just from here to here, that's a 91% move. Look at how beautiful that is. Look at how beautiful that is. Look at how beautiful that Evol was. Epic. Oh, beautiful. Just beautiful Epic. Just beautiful Hill. Just beautiful Taser. Well, not yet. Just beautiful Sigum. And these charts is what just made this a great market. And until you see Max Green Bop charts like this, or like this, or like this, we got to go back further to show you this. we're not going to have a bottom. And we don't have that right now. So you know what? I know now that I've gone on long enough. I'm going to go ahead and wrap it up there. This is Joshua Hayes at BigWaveTrading.com. Until you see Max Green bop, until you see heavy accumulation and flat to uptrending to cupish price patterns, it ain't going to be a bottom yet. So this is Joshua Hayes at BigWaveTrading.com. I'm sorry, I do have a slight cold, but oh well, you learned a lot.